Welcome to another episode of Simply Invest. As we know, SPH, who is a media giant in Singapore, is seeing its stock price free falling. In fact, its stock price is currently at all-time low. So how do you know it is indeed undervalued? How do you know it is the right time to buy? In our previous Simply Invest video, we have shared with our viewers on 3 simple valuation methods, using Singtel as a practical example. Do check out the video if you have not already done so. Today, we will attempt to apply some similar thought process on SPH stock. Please be mindful that these are just illustrations and in no way a recommendation for you to buy or sell the stock. Alright, let's go. Before we start, it is key that we understand deeper what kind of businesses SPH are really doing, as they are not just simply a media company that people typically associate them to. How do we then figure their businesses to see where SPH is deriving their income from? A quick look at their latest FY 2020 annual report announcement might give us some hints, but the information is highly distorted due to current COVID situation. Take for example, their other operating income. Wow, what's going on there? We are looking at a 383.3% increase in operating income to 88.9 M. Okay, let's dig deeper into it. Their notes to financial statement shows the income coming from job support scheme and other COVID-related grants. Well, we know for sure this is definitely not a business income that will last. To have a better sense, let's look at their past 5 years profits trend. We see that in general, they are pretty consistent, in the sense that media revenue is consistently coming down and property revenue is consistently flat. Profit margin is also relatively flat. Therefore, we see it appropriate to dive into 2019 numbers and use them as a gauge for now. From their 2019 annual report, they are deriving around 54 M from media and 270 M from property, and other income is making some losses, but we are going to ignore it. Armed with their income sources, we can derive that SPH is approximately 17% a media business and 83% a property business. See, they are not exactly a media company. And where do they get their property income from? They actually own 63.36% of SPH REITs, which is where all their property business income is coming. For this analysis, we will simplify our comparison by assuming SPH REITs is trading at fair value. This is to allow us to isolate and value SPH's media business, as, if their media business is concluded as overvalued, there wouldn't even be a need to evaluate SPH anymore, as one should be looking and analyzing at SPH REITs instead. Now, SPH REITs currently has a market cap of 2,279 million. If we take 63.36% of that, we derive 1,444 million market value. If we subtract this from SPH stock market cap of 1,616 million, we derive a market cap of 172.32 million for their media business. Dividing this by their 2019's earnings of 54 M, we derive a PE ratio of around 3.2. Sounds pretty decent. But let's be more prudent here and look at their 2020's earning. Ouch, no longer that rosy. It translates to a loss of 11 M. Do I want to pay 172 M for a loss-making business? This article sums it up. Digital publishing disruption is stealing away digits from newspaper companies' earnings. A 3.5 to 5x annual EBITDA, earnings before interest, taxes, depreciation and amortization formula is currently being used as a benchmark. Therefore, even if we bring back pre-COVID advertising income and we buck the trend of a deteriorating industry, and for some reason we generate an income that matches 2019 level, we will very well be still within industry fair valuation level, even if at a slightly lower than average valuation spectrum. Does that mean that folks who are looking to buy SPH stocks should just look and analyze SPH REITs instead? Let us know your thoughts in the comments section. We hope that you have enjoyed our sharing. Please click the like and subscribe button now if you haven't yet done so, as we really do need subscriber like yourself to keep the channel going. Thank you.